Charts Live. This is Bob Desmond, and we are talking Meta. We are talking Apple. We are talking Amazon tonight. So let's get to it. I want to first talk about hubris. Hubris, we're all guilty of it from time to time. I spoke about Zuckerberg selling shares of, it was reported on January the 4th. Zuckerberg sold the most shares he had sold since 2001. No, 2021. And a lot of folks out there said, you know what, you got to go short of Meta. And on that day, I took a look at the chart and I said, no, don't short it. I was tempted. But I looked at the chart and I said, no, it looks like it's going to break out. And sure enough, it did break out. We're going to talk about earnings. We're going to talk about that call. If you would have listened to Wall Street and what they told you to do back then and where you would be right now. So let's take a listen to Keith McCullough over at Hedge Eye. I happen to like Keith. I'm not knocking him, but this is classic Wall Street talk, and it didn't end well. So let me I'm sharing my screen. Let's play this. Let's do. Can I speed this up? I guess not.
And this is the way to play it from us. Again, today I've been trying to focus on going from signal to research, right? I got my signal. I know what that's telling me. I stare at it and look.
This is January 4th.
Between 9:30 and 11, and then between 2:30 and 4. And the way that I take your research from yesterday, post my signal, is straight up. Like every one of our pod shop clients that have to run neutral should be long Google and short Meta, and that is the way to play this. All right. Meta, Zuckerberg sold $500 million in stock yesterday. Okay.
I know.
Now,
yeah.
Now I'm old enough to remember when I started on Wall Street, a $5 to $10 million insider sale would get the whole street going, right? Then it became 50 million. This is 10 times that. This is $500 million in stock. Now you might say, well, the guy's worth like $50 trillion because you're an idiot. You wouldn't know otherwise. And I'm not talking to you guys that are paying us. I'm talking to all the idiots on Wall Street. It's not a big deal. When was the last time Mark Zuckerberg sold stock? Do you know?
Well over 2 years ago. I think it was back in 2021, right?
I'm not guessing. It is in November of 2021.
Yep.
At the absolute all-time high of the mother of all bubbles, Mark Zuckerberg, one of the smartest people in American history, sold stock. All right. Now he's selling it ahead of the quarter. I mean, if you didn't hear that, again, CNBC, you guys suck. I know some of you guys are paying to watch this because you just have to eavesdrop, but you guys really suck, right? You're gonna what I just said yesterday, what Friedman said, and what I'm saying today, and you still won't tell anybody about it. That's why you suck, okay? And that's why we're gonna keep disrupting you because it's easy. Anyway, so with that, Friedman, long Google, short Meta.
Okay. So let's take a look at how that worked out. Here's a chart of Meta going back to right here, the 4th of January, and it was pressing up against the upper band of resistance. And all it was doing a stair step up higher off of this long base. I'm quite aware of how strong that base is because I tried to short it at around $300. It wasn't going anywhere. And I just gave up on the short. And thank God I did, because I would have had my face ripped off. So sure enough, here we are. Since that point in time, nearly 20% later in the past month, less than a month. And Keith said short it based upon what technically is telling you to sell this stock short. Nothing. There was nothing. All you had was a news event, no validation, no confirmation. Now, if we were breaking down below support levels on volume, putting in lower highs, lower lows, okay, I'm with that. Now I have a developing trend. I could do that. Maybe sell a call spread, short it from afar, or get short using cheap options. But there was no reason to go shorting Meta at that point in time. Add to that, he said to go buy Google. That was around the 4th right here. And you would have only been up, I'm being hyperbolic right now, a little over 14%. Actually, I'm sorry, it pulled back. Here's the 4th. You would be up let me try that again. Up 5%. So he said to short Meta and buy Google. That would have been a disaster because after hours tonight, Meta announced earnings. And I got to tell you, I've seen earnings reports before in my life, and I'm no Zuckerberg fan here, but I am a fan of Wall Street, of the stock market, not of Wall Street. And wow, what a earnings bonanza here. And I was thinking about shorting this at 420. And I said, before I pull the trigger here, because it was ripping beyond the anticipated market maker move, I said, how much further can this go? And I said, before you pull that trigger, dig deeper into the earnings announcement. And I couldn't find anything bad. They announced a dividend. When I saw this, I was like, aha, they're going to miss, or they're going to guide down on forward-looking guidance. They didn't. Strong earnings, revenues, blah, 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 blah. Everything looks good here on Meta. And thank God I did not do an earnings trade on this. I stepped back. I said, you know what? I don't see any opportunity here for implied volatility crush. So I didn't place a trade. And thank God I didn't, because I wouldn't be down right now, but I'd be stuck in a trade that I don't want to be. So I'm just glad. I would have been a lot of capital tied up in this stock, and I just would have been in a holding pattern, hoping that I don't get my call side strike tested. So and I would have gone out 43 days on this trade, and that would have been a long 43 days. Now what we could do here with Meta is we can go to the chart of Meta, and we could say, okay, let's bring that back up. Where is our 20-period moving average here in green? We're going to be way up here tomorrow. What we could do at that point in time is, after it rips up higher tomorrow, and it's probably going to open at or around where we're at right now, it's going to press higher tomorrow. So mid-afternoon, late afternoon tomorrow, we're going to be looking to sell a deep out of the money call spread on Meta in anticipation of mean reversion. What does that mean? What it means is that when you get this far extended beyond, whether it be your VWAP, whether it be your 20-day, 5-day, whatever moving average that you're using, it doesn't matter. Whatever floats your boat, you're going to get a mean reversion at some point in time. Either the moving average is going to catch up to the stock, or the stock is going to pull down to the moving average, or a mixture of both. It's probably going to be a mixture of both. Okay? That's what normally happens here. So we're going to let this continue to run. Shorts are going to get their face ripped off tomorrow morning, and you're going to have hedge funds in there buying this stock, trying to grab that dividend. So buckle up for a strong day tomorrow on Meta, but we will be looking to put a bear trade on Meta late in the day tomorrow. I'm in no rush here to put that trade on, but it's going to be extremely overbought intraday, very overbought on a daily time frame. As a contrarian, I love that from a short perspective. We are not going to short the common stock. What we will look to do here is this. We're going to have to pretend that these options are pricing in current move. Right now, in the after-hours session, we're up over 14% on Meta. So what could we do here? Well, let's pretend that this earnings report did not happen, and we're dealing with the closing price at 394.78, right? We're just going to play pretend just because so I could use the deltas in real time. So what I would do here is I would go out 43 days. I would go to a 394. Let's go to a 430 delta. That's interesting to me. 14. Actually, no, that's not interesting. That's 27 delta. That's a 21 delta. Let's get to a 15 delta. 16 will do. Close enough for government work. Then what I want to do is I'm going to sell to open that call side strike. Remember, this is going to be completely different tomorrow, these strike prices, because the options will now be calculating in the new deltas and the new premiums for those options. So the expiration date will stay the same. So we're going to sell a 450 call, and then I'm going to sell a $15 wide strike call side, and I'm going to collect a premium of $1.51 per contract, generating a cash flow, a deposit into our account of $1,500. Now, what this does is that by buying this call option, it does two things. One, it reduces the amount of buying power that I have to put up out of my margin account. It also acts as a insurance policy, just in case you have another rip your face off rally, which is highly improbable, but it makes my broker feel good that, you know what, you're being careful here. If they're happy, I'm happy. In the end, they're my senior partner, so they can jar me out of a trade if they want to, whether I like it or not. So we go into this trade with our interests are aligned, if you will. So our risk is managed, and this will be a trade that I'm looking to put on tomorrow. Different strike prices, same deltas. A delta is the amount of move a stock will do on any dollar move. So hypothetically, if I'm buying a 16 or selling a 16 delta, if Meta moves $1, that option moves up 16 cents, if that makes sense. So basically, 16% of a dollar move, okay? So that's what we'll be doing tomorrow on Meta. Members, stay tuned for a alert. So in the after hours, we are looking very, very good here. I mean, we're probably going to wake up. This will drift higher in the pre-market in the morning, and they're going to take it up in the morning as well. You're probably going to get a 15-minute extreme overbought level, probably 89.90, if not higher, on that chart. Then we're going to look to start selling premium on Meta, the trade I just showed you. Let's go to comments. Let's say hello to people, and then we'll go over Apple, and we'll go over Amazon. All right. The gang's all here. Sean. Hey, Bob and Gang. Bob, can you go over MO? Yeah, absolutely. Great chart. I took a look at the weekly chart before we went live. Sean, I will most happily take a look at that chart. Sean and I, and probably a couple of other members, own Mo. It's supposed to be called Altria. I'm purposely mislabeling it. Don't report me to the woke crowd. I call it Philip Morris because I love that name so much more than I like Altria. Where they pull that name from? K-Man Productions. I assume that you are shorting Meta. I think you're a little bit premature on that short. I'm with you on the call, but I think you're a little bit premature to be shorting in the after-hours session. I think it goes higher tomorrow. A lot of short covering, a lot of underweighted institutions out there. Corey, good evening, Bob. And I could be wrong. We talked about rum last week, and man, what a buy this has been. Yeah, so I took a look at rum today, and I've been saying RMBL, different symbol. Rum, I was corrected. A couple of people corrected me on that. RUM is the appropriate signal. I admit when I'm at wrong. I admit when I am wrong. That way I stay very humble. and I do not get my butt kicked in the market as frequently as I used to when I was young, arrogant, and cocky. So, yeah, I was looking at RUM today. It was down on the day. I think we can get a further pullback. I have some capital on the sidelines in my longer-term brokerage account, and I plan on buying some shares of Rumble and beginning to build a position there. EPS is not there. They're losing money. However, their growth is really, really strong. I like the company. All I'm looking for is 10, 15% of YouTube's market share, and that's a multi-billion-dollar company. So I'm liking it, Corey. I'm with you. I like the trade. Jody, hello. TZ Burton, hello. Short NVIDIA, SMCI. I haven't looked at Abercrombie and Fitch in a while. AXP, good quarter. V, the last time I looked at it, they reported they were down 4% on earnings. Amazon, Meta, CMG. Be careful that CMG. It's tightly held, and there's not a huge float out there. So be careful of short squeezes. I did an earnings trade on that back in the March quarter of last year. I went to it was only 2 contracts, but the shares just ripped up higher, and they ripped my face off. So I carried that. I'm over in Europe every single day. They kept taking that stock up higher. And I'm over in Europe trying to enjoy. I did enjoy myself. I had a great time, but I had to nurse that thing over there, and I was not a happy camper. So just be careful of that stock, being short of it. Okay, I really want to short Meta tomorrow. Maybe no, it's not dumb at all. I wouldn't go necessarily shorting the common stock. If you're going to do it for a scalp, okay. I wouldn't go shorting the common stock. I would rather sell a call spread. And you could use that to be short of the stock, but it's not moving it's not 100 cents on the dollar that you're short. You're short using, again, a insured position. So I'll be short a 16 delta, but I'll have a hedge of a 10 delta. So while it's kind of like it's a very, very risk adverse short of Meta, I believe that it will go down. Heck, I may scalp it myself, but I don't want to necessarily short it overnight, because it could be another week or so before it finally poops out. Take a look at what happened with NVIDIA. NVIDIA at earnings, not NVIDIA, Netflix. Sorry about that. Netflix was one of the first stocks in the Magnificent Seven. As a matter of fact, it was the first stock. Here's the gap up. All right, so here's the report. We rallied to a 17.33% on earnings. Now, keep that in mind, 17.33% on earnings. Where is Meta? Meta is up at current 14%. So this is a far better earnings report than what Netflix had. So I wouldn't fight this yet. I'm not there yet. I will be in the next couple of days. I will sell a call spread. I'll look for topping action on Meta. Then I may either I'll probably buy a put spread, and that'll get me more exposure to the short side, but it's a defined risk. I'm not tying up too much capital with Meta. And if anybody wants me to go through how I would set up a put spread, buying a put spread to short Meta the same way I just did this, let me know. Leave a comment in the comment section, and I will do that. But I don't want to waste people's time if you're not interested in me doing that. So no, Jody, you're not dumb. It's a contrarian trade. That's what you do when these stocks get a lot of money ripping into them. You don't want to just do it right willy-nilly. The knee-jerk reaction is often the incorrect action. So what you want to do is you wait for the buyers to begin to putter out, okay? Let them exhaust themselves. You have the wind at your back right now. You have your capital. You're ready to leg into it. Just play the game, right? Sell a call spread. You're short then wait to buy that put spread, and that way you're in the catbird seat. Franklin, welcome, my good friend Franklin, the gentleman, the man, the myth, the legend. TZ Burton, I'm doing my own research, technical analysis, no gut feelings. Very smart. Thanks for drilling down on how to choose those structures. You're welcome, Jeff. Anytime, pal. You're welcome, Sean. Anytime. Okay, so let's talk about, and again, if you want me to go over how I would set up a put spread, let me know. That's another way of shorting it, but it's more directional than a call spread. It's a little bit more aggressive. It's a lot more aggressive. All right, so that is Meta. Let me take a sip of water here. Okay, so we also had earnings out of Amazon. Now, Amazon is up what now? It's up over 7% after hours, or $11.32. I believe that exceeded, yeah, it did. So the anticipated market maker move on Amazon's earnings was about $9.58 per share. So we're beyond that now. This would have been a profitable trade had I put this on. So would have Meta, but it would have tied up too much capital with the move tomorrow. So Amazon looking good here. They had really, really good numbers. Their cloud business very strong. We kind of knew this, and just one thing to be careful about is that they're using as one of the reasons why they're pumping up the stock after hours is holiday sales. This is a known. I heard it as recently as this morning on Bloomberg while I was driving that they expected strong earnings because they already knew that their holiday sales were gangbusters. So be careful of a potential pullback on Amazon. I haven't gone deep into their earnings yet, so maybe there's going to be a reason for more follow through tomorrow. So I don't want to pretend that I've really gone through these earnings, but just be careful. The holiday strength, that's a known on the street, so don't get baited into that. That's already priced into the stock. Cloud business, that's something that's still a question mark for Amazon, so that may drive the stock up higher. Let's see if there's anything else that jumps out here. Q4 EPS dollar on sales of 170 billion. It's insanity. Versus expectations. They beat on EPS, and they blew the doors off of revenue. Strong quarter. Amazon guides 138 to 143.5 billion for Q1. So they're guiding about the expectations in the middle of where their revenue guidance is. So a strong quarter, good guidance, and Amazon is looking really, really good here. Let's take a look at the chart of Amazon to see how it looks moving forward, because that cloud business has been a little bit of a question mark for the stock, and it looks as though this stock has a lot more upside here. Let's go to my annotated chart, and let's talk about God darn it. I have so many charts here. Here we go. Okay, so here you can see that Amazon broke out today above resistance at 157.50. Where are we trading at current? We are trading at 170. So we're going to open up overbought. However, on any pullback here, even intraday, I'd probably be a buyer of Amazon stock. And let's take a look at where we may have resistance above. Okay, so where they're going to open us up tomorrow is right up and into this resistance level here at around, let's go with 172.55. So in all probability, in all probability, we're going to get a little bit at some point in time tomorrow, a little bit of two-sided action. Probably early in the morning, they're going to gap it up. It's going to be extremely overbought. You're probably going to get some profit taking and some overhead supply, meaning remember that the Qs are at all-time record highs. The however is that I think we're going to 176. The however is that we have no all-time highs here yet. I think we are going to all-time highs, but they're going to have to get through this wall of sellers tomorrow. And I don't think they're going to do that on the first go around. I think that there's going to be a little bit of rejection up here. I'm not certain at which point. I'm never going to know that in advance, but there's going to be a little bit of selling here. And on that selling, I would either A, sell puts. That's a bullish bet. Or B, I would wait for a nice orderly consolidation. I would buy the stock as long as the Qs are holding up and the S&P is holding up, yield curve is not driving up higher, and then I would look to open up a position in Amazon, of which I do not have, but I want one anyway. Now, I went over the weekly chart of Amazon. I did not do the same for Meta. So let's talk about that, where we may see some resistance tomorrow. Oh, we're already at all-time highs. We're already at all-time highs. Oh, this stock is going up a lot higher. So this is another reason why you don't want to go shorting the stock too quickly. You may be right. I would prefer to do the call spread because we're at all-time highs. We have no overhead supply above, clear blue skies, unlike Amazon, which has overhead supply. So be very, very careful here with shorting Meta aggressively. If you're going to short the common stock, nibble, 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 leg into that trade. All quality people are. Okay, I'll go over the put spread. Jeff, you want to see the put spread as well? Okay, we'll go over that. Okay, so let's talk about the put spread. So you could do a 80-20 or a 70-30. I mix it up, right? It depends upon my conviction on the trade. So let me walk you through what a 70-30 is, and we'll use that as our example. And this is a less aggressive way of shorting Meta stock versus an 80-20. So I'm going to change what we had here as calls. We're going to change them to puts. And we're going to do the same thing as before. We're going to pretend the extended hours action didn't happen. We're using the closing price as of the end of business today, pre-earnings. So how I would set this trade up is that I would not be buying this 43-day put. I don't want that. The reason why I sold the 43-day put is because at 45 days, that's when time decay begins to pick up. Right? So I don't want to buy an option with time decay beginning to pick up. That's stupid. So what I want to do is I want to go out I'll get it right eventually. 78 days. April 19. And what I want to do here is I want to buy a deep in the money put. I'm going to go with a 70 delta. What's a 70 delta again? For every dollar the stock moves, the share price moves 70 cents. In this case here, you're going to see a negative sign because this is a put. So if Meta goes up, the price of the put declines by 70 cents. If the stock declines, the put goes up by 70 cents, if that makes sense. Okay? So what we're doing here is that we're shorting a stock with an in-the-money put option. Here we go. There's my 70 delta. So I'm going to short, pretending that the after-hours action did not happen. We're using 394.78 as our entry price, okay? I'm going to get short of Meta. Now, I'm going to use a 70 delta, and I'm going to buy at the midpoint a put for $51.13 per contract. But simultaneously, I am going to put on a hedge, and I'm going to sell. We're going to change this to buy to open. This is going to be sell to open. I am going to sell that's close. I would probably go with the other one, but we'll stick with this because it shows 70-30. So I am going to buy to open a put contract expiring in April, very low time decay for $51.13. But simultaneously, I am going to buy or sell to open a $13.60 put option. What does that do? It reduces the cost of my put from $51.13 down to $37.53. That's the trade. That's a 70-30 delta put option. In this case here, I'm buying the option, okay? In the other instance with the call spread, I was selling the option. I was the banker, not the casino. In this case here, I'm more of the gambler and not the casino, if that makes sense. However, I'm not being arrogant. I'm putting on a hedge here just in case I'm a little bit early. And I'm not going to do, if my intended allotment is 10 contracts, I'm doing maybe 2 contracts at a time as the share price moves up higher. And then I'll build up to that 10 contracts. That's a 70-30 call spread. And you can adjust it. If you're really aggressive on the stock, you're really confident the shares are going to move in your direction, change it to an 80-20 delta, less insurance. You're paying more for the option, but you're more confident that you're going to be right. I opt for the 70-30 on average most of the time. Okay. So the other stock that we want to take a look at is Apple. Now, Apple, they put up good numbers, but it wasn't good enough for the street. So these shares are down now. Around 3.25% in the after-hours session. So you can see the knee-jerk reaction here was to take the shares up higher, but then they went into a downtrend. So let's talk about the earnings here for a moment. And so they snapped a 4-quarter revenue decline streak. We may have opportunity here. I'm trying to see what the street did not like. And if somebody knows it, just pop it in here and we'll save some time. Okay, so here we go. Apple posts Q1 EPS of $2.18 on revenue of $118.6 billion. That beat on EPS and it beat on revenues. So there must be something. Growth resumed in China. Apple beats on revenue earnings. China sales down. That's the reason. China sales down 13% year over year. That's why. Okay. Yeah, that's why. Okay. So you're probably going to get a little bit of a washout here on Apple. China's in a bad way right now. I don't know how much the street was expecting them to blow away numbers over in China. China's a basket case right now. So I think that they may be overdoing it here a little bit on Apple. And the contrarian play here may be let them wash it out tomorrow. Hopefully they bang it down with 30-minute, 15-minute RSI down below, 20, 15 around there. And then we look for support levels at which to step in there and at least get a counter trend rally on the stock or sell puts on Apple stock. So that's the deal with Apple. All right. And let's take a look at Apple's chart and try to figure out where we have support below. We'll do a little bit of that legwork right now. So what I'm going to, we're going to use TrendSpider for this. I want the multi-time frame analysis. So folks, if you're not using TrendSpider, link below. There's a 35% discount code at a minimum. They may be offering a better deal on their website, but use the link below. Help support the channel. Let's bring up AAPL. All right. Let's get all these drawings off. All right, so this is a daily chart. We don't want that. Let's bring up I don't know if they're going to bring up the after hours on a weekly chart. Let's check it out. No, they don't have the after hours on a weekly chart. 180.70, that brings us down where? 180. I happen to like the support level. Right where it's trading right now is a really good support level. So if they knock this down, I'm using the volume shelves here and the fractal support level, which is rising. Now, if they overshoot down to 177 per share tomorrow, I'll be a buyer of Apple tomorrow morning, or at least selling put options on Apple stock. So members, more to come. Let's go to an intraday chart here. They'll show the after hours session here. And there you have it. We're right at that support level I just drew. So the street is liking that support level. However, I want to see an overshoot down to this one. This is a Fibonacci retracement level at 177.50 on Apple. That's the price point I would be looking at to begin to go nibbling on the shares. So, members, more to come. You're welcome, Jody, anytime. Okay, let's talk a little bit about the street. So we know that Jay Powell kind of threw cold water on a March rate hike. For now, anyway, that changes. The one thing about Wall Street is that they have very, very short memories. Where news cycles go like this. So, frankly, Jay Powell's testimony yesterday is old news now. So now they're going to be dealing with guidance that comes out of the street or out of Washington tomorrow. Tomorrow is non-farm payrolls. Now, this is what I like to call the Pimp Mac Daddy of economic data reports. And watch this report tomorrow, U.S. hourly earnings. You don't want to see, all right, so this is going to sound crazy. As a human being with a conscience and a pretty good person down deep, I want to see wage growth. However, this is the Wall Street coming out now. As an investor and a trader being at current net long the market, I want to see a miss on average hourly earnings because the street will like that and they'll take shares up higher. They will not like an inflated wage growth number. That will not do good for stocks. So tomorrow, a very, very important number coming out, and also consumer sentiment as well. Now, the Federal Reserve's balance sheet, I kind of thought they were going to lift it up higher this week. They didn't. They resumed selling of treasuries. So this is actually tightening because they stopped for a couple of weeks. And in fact, last week they increased their balance sheet, which is favorable for equities. And as of this evening, this is reported today, but as of yesterday, they dropped their balance sheet yet again. So Jay Powell is taking advantage of this kind of quiet period in the economy. We're not really seeing big blowups. We saw community banks, New York Community Bank yesterday dropped 36%. I think another 14% today. That may go under, but no major blowups here. And he's taking every moment he can to drop off debt off his balance sheet because at some point in time in the near future, this is going way up, way beyond the 2022 highs. They're going to have to. So looking at the FOMC Fed Watch tool, expectations for a rate ease, 37.5. This may have even gone down with the earnings out of Meta and Apple. Actually, it went up 39%. And as for May, this was at 100%. I don't think that this is right. This was at 100% before I went live, and now it's saying 72. I don't think that's right. Equity prices, 33 PE handle, and it's probably not going to change tomorrow. It's probably going up. So I think that what we may be at the precipice of is a melt up in the equity market. And as I was saying to members earlier, that if you believe, as I do, that when the Federal Reserve, and this is factual, over the past 20 years, 25 years, when the Federal Reserve first cuts rates, that's usually a top in the equity market. And it gets bad from there until they get enough rate cuts to provide enough liquidity to get stocks moving up higher again. What I think we're at the precipice of right now is that while there's a ton of bad economic data that is out there, I mean, simply let's go through it. PayPal laying off. They're laying off 2,000 employees. UPS, where is it? UPS laying off 12,000 employees. Bank failures on the year, ripping through the ceiling. Oh, this is as of last year, to be fair, last year. Commercial real estate in 2013 sold for $71 million. In November of 2023, sold for $16.5 million. That's not adjusted for inflation. That is just a dramatic haircut. Off a triple net seller. This is the Xerox building. Everybody's seen this building. You pass by DC. Sold for $145 million in 2011. They just sold it for $25 million recently. The building is reportedly at 38% vacant. And that's not as bad as some of the buildings in Manhattan. You take a look at the regional bank crisis, and we've had a reprieve here, but this week is the worst week since March of last year when the regional banks began to blow up out in California. Here's the UPS job cuts, 12,000. Somebody out there, and I want to talk about this for a moment because this could be misleading. A trader bought 50,000 CBOE volatility VIX calls expiring 50 strike. That's pretty far away. What do we close at? With a 14 handle. So they spent about $1 million. You know, the way they're trying to portray this is just some speculator out there that is betting on a market crash, which is basically what this is a bet on a market crash. It could be just a hedge fund out there just putting on a hedge. That's hedge against his long positions, just in case. So, read into it what you will. They want you to take this in as being a sign of a market top. I don't think it is. Even with all this bad data. Leading economic indicators. There's definitely a divergence. The leading economic indicators are declining while the equity markets are moving up higher. This is not a lot. This is all true. This is all bearish stuff. But where do I think that the markets are going? I think they're going up. I think they're going up. Why? Let's talk about it. Yield curve. This is a monthly chart. The last time we met together, we were near the highs of the month. By the end of the month, we did have a breakout. I think we are going to retest the breakout point. Here we are in red. So we have pulled back dramatically on the yield curve. What does that allow equities to do? It allows them to go up. They're not worried about a steepening of the yield curve right now. Right now, we're pulling back. We're consolidating. At some point in time in the future, we're going to head back up. But right now, the equity markets are saying, we're good. We're ready to go up here. On the week, we're down. And looking at bond prices, they're breaking out. What does that mean for bond yields? Here, TNX. Bond yields, even though Jay Powell said we're not cutting in March, they're breaking down. They're going lower. So while the transports are down on the week, the Dow Jones Industrial Average is at all-time record highs. Clear blue skies ahead. No overhead supply. I cannot instill how important that is. There is no real meaningful resistance above. You could extrapolate using connecting the highs back here and say, okay, we have resistance above, but you don't have actual sellers above. So you're dealing with clear blue skies. This could move up higher. S&P 500 weekly chart, all-time record highs. Triple Qs, they're off their highs. It looks as though after earnings today, they're going up higher. My bet is that they sell off Apple tomorrow morning. Don't be the least bit surprised they close Apple up tomorrow. Now, the play here that I'm betting on is that we see the small caps begin to play catch up. And the argument that I have is that one of the reasons why the triple Qs are rallying so hard is because AI infrastructure, semis, equipment, programming, software. What about the small business that's seeing productivity gains from AI? What about them? In my own little niche business here, I'm getting productivity gains with AI. So why wouldn't these companies be getting the same? And don't they have room potentially for multiple expansion? The only thing weighing on small caps right now is that there's a lot of regional banks in the small cap basket. Wendy, hey, late to the party. No worries. I'll be watching. Good for you. Awesome. NVO just had earnings, and I recognize the logo from taking up walks with my mom, like a small company, but consistent steps up. Looking at adding to my core. All right, we'll take a look at the chart for you. NVO question: what could be the pitfalls for a company like this? I don't know the company. Let me bring it up. NVO. I outsource my fundamentals to Investors Business Daily. Oh, Novo Nordisk. I do know this company. I've never traded it before. So drug maker. So the drug companies are breaking out. In fact, if you take a look at the LABU here, weekly view, LABU, we have a breakout. If you want to take a look at NOV, a rough week on the week, no doubt about it. But we're consolidating here. We broke out. I think that what you may be seeing here in Novo is this. So here's your breakout last week. This week is a breakout point failure. Now, all this stock needs to do to be a buy in my book is to close above $20.75 by the end of business tomorrow. Where do we close at? It's doable. It's doable. Let's take a look at the daily chart, see how we closed out the day today. I don't think I've ever studied this chart. No, I never have. Daily chart. So you had a bullish reversal bar, one of my top 5 favorite candlestick patterns, 5-part video tutorial, link below, free. Bullish key reversal bar on the day. So it's quite possible that we get a pop up on NOV to salvage the week. You need to close above $20.75 to go accumulating more. What are the risks for a stock like this? Mostly headline risk, drug trials that went well, didn't go well. That's usually what it is. This is a pretty established company, so I really wouldn't be worried about capital, anything like that. So headline risk, by and large. It's probably a steady Eddie. Does it pay a dividend? Small dividend, not much. Sorry about that noise. It's one of my alerts. Okay, let's do some chart requests. And I want to talk about gold. Gold. A very, very solid week for gold this week and the gold stocks. Gold is breaking out. One trading day left to go. One thing that people want to continually dismiss gold, and it drives me crazy. The one thing that people aren't paying attention to is that 2000 used to be rock hard resistance, but it's now support. It's now support. So I don't know why the street is not paying attention to this. I'm glad they're not. They will eventually, especially when we break out to new all-time highs. But I think that gold is still, oh, God darn it. Gold is still a buy here. And the options, I believe, are still pretty cheap. I own the physical. Oh, they're so cheap. They're so dirt cheap. There's so much room for IV expansion here. It's ridiculous. So I'm loving the options on gold. They're extremely cheap. The street is not paying attention to this. If they were paying attention to this, they would be putting some call skew on here. They're not doing it. So good for us. And one Sunday night, we're going to be going live. It's probably going to happen on a Sunday. And this thing's going to be up 3-4%. And there's going to be no looking back. And the street is going to be very, very underweight, which they are. And they're going to have to go chasing a very small market on a relative basis versus the equity market. And they're going to rip the faces off of shorts. And as for the gold mining stocks on the week, they are setting up for a launch here. So think about your position in gold, the mining stocks, silver. I haven't looked at this today. It's up on the week. So Start looking at these names, folks. Okay. Do you like SLV and gold miner? Yeah, well, I own AGQ, which is just a leveraged SLV product. So yeah, I like SLV. If you're risk adverse, SLV is fine. If you want more risk, that's fine as well. AGQ is for you. Gold mining stocks, if you want the junior miners, GDXJ. If you want a leveraged ETF of the senior miners, NUGT. If you don't want that volatility, just simply buy the GDX, and that's the senior miners, which is less volatile than the junior miners. URA for the lovely Jody. Let's do that. URA, our fellow member Franklin is a monster on this, and we've been watching it, and it's breaking out. It's going up. It's going up. We're probably going up to $34 per share. That's where we're going. Now, if you're looking for a buy here, if you're wondering why, I got to share something with you. I'm going to publicly humiliate myself right now, but I need to share stuff. So this morning, I'm up at 4:15, 4:30 in the morning. I go into the bathroom. I start brushing my teeth. This is within 2 minutes of me waking up, right? Somehow or other, I splatter toothpaste into my eyes, and it's my eyes are like on they're frozen solid, and it was just a horrible way to wake up. And to this minute right now, I keep rubbing my eyes all day long from 4:15 this morning for getting toothpaste in my eyes. So I'm glad I shared that with you. And anybody that wants to make fun of me, go ahead. I put myself out there. So what I would do here, I would create an alert. Oh, they won't allow me to. Here. Oh, I know what they're. Okay, I know what they're doing here. I would look for a retracement. Down to this support level. And I would keep where it says there's this purple area here. I would keep that on. That's a sensitivity zone. And I would wait for a pullback. And I would buy there. And you may want to put in an advanced order if you're really bullish. An advanced order means you're just going to put your order in pre-market, good till cancel, or good for the day, whatever. That's up to you. And touch, bounce, boom. And that price is at or around $31.83 per share, give or take a dime. But I think that we're going up. Thank you. Thank you. I pride myself on my ability to humiliate myself. Yeah, thank you for your kindness, Jody. Okay. Kathy Woods brought up SoFi on the dip, and they add new services. I was surprised with the SoFi. I happen to like SoFi, but I was doing a dollar cost average into Bitcoin on SoFi for a couple of years. I made a lot of money. I was just putting it in there, steady Eddie, $50 a week, $100 a week, every single week. And one day I log in, I went to go buy some Ethereum, and I get a banner note. You got to sell your Bitcoin. We no longer do crypto work. And I was shocked. And apparently they blew their doors off on earnings. All right, let's go to the members area. I want to make sure I didn't miss anybody. And we're pretty much at that time. Yeah, we're over. So I'm going to check the members area and make sure I didn't miss anybody. I did. G for Larry. Larry. Genpact. I don't know this company. All right, so the stock is in a long-term downtrend. We've had several months of an upward move, but net, we remain in a downtrend. It's clear and defined. Right, so upper band of resistance, lower band of support. You have your VWAP up in blue at around 38.49 per share. RSI grinding up higher. MACD has gone positive monthly time frame. That's good. The problem is this, is that you have a lot of overhead supply above. Now, to be fair, we broke out last month. We have a continuation move this month as well. But here is your resistance level at around 36.91 per share on a monthly time frame. Weekly view. You also have a little bit more resistance up here at 37.25. I would do this. Isn't G, sorry about that noise. Isn't G the old symbol for Gillette? They look like they're about to report earnings. Going back to Novo, very strong fundamentals here. Very, very strong fundamentals. It's under accumulation. Now let's go to G. What happened? Try that again. They're going to report in a couple of days. So that's why you have your IV rank, which is so high. ROE, very strong. Not a big dividend yielder. Sales growth. I mean, it's a stodgy stock that doesn't pay much of a dividend. The group is out of favor. It's been in distribution, but they're beginning to start accumulating it. I never even knew they did this pass fail. Okay, so I'm not loving the fundamentals here. And the street is expecting some volatility on earnings. So they just shot it up after hours. But that's probably on thin volume, 100 shares, yeah. I would wait until after earnings. Because you're only a winner if you wait. You only have a small anticipated move on the stock. If it gaps up, it'll take you above 37.25. That's a breakout, right? So check that box. If it closes the week above that mark, you spend a couple of days trading above it, it holds, consolidates, then you're above all that resistance. Guess what? That sets you up for a rally up to around $40 a share. Now, what if they gap it down? Okay, who cares? You don't own it anyway. So wait for support level to get hit, either the 21 period EMA at $35 a share, or even better, down at the VWAP, which is rising, and it's going to intersect with the support level here at around $34.60 per share. That's the way I would play this one, where I'm looking to put on a long trade. It's definitely not a short. They're trying to flirt with a breakout here. I would not play this. I would not bet this stock into earnings. I would allow earnings to happen, and you can see how much overhead supply there is here. They're spending a lot of time trying to break through here. They're not having much success. They may need a big pullback, a lot of sellers giving up here, getting out, moving to the sidelines. That sets it up for another run, and it's going to be a lot easier the next time around for the stock to rally through that resistance level. That's the shot with Genpact. Intel announces more bad news after the close, saying chip sales are drag. Oh, really? Okay. I turn over a cup of tea around 4:30 and not one. All right, so I feel your pain. I had to use a half rule. All right, all right. Thanks for being here. Everybody have an awesome night. I'll talk to you soon. Be well.